Hey everyone, welcome back to the Investor for Life channel. Today I want to discuss whether the YieldMax TSLY or TSLY ETF is a good buy now or not. This ETF has been gaining a lot of attention recently, mostly due to the extremely high dividend yield and the dividend payouts. But we're going to deep dive into what it's all about and whether it might be a good addition to your investment portfolio as of now. This ETF has been out going on almost a year now. Gained a lot of traction, I would say, over the last couple of months. A lot of people, a lot of investors have bought into this and got into this ETF. But is it making you any money? At least for them. But is it a good time now? Let's take a look. But before we get into the meat and potatoes, please subscribe to the channel. Please give this video a thumbs up. And please hit that bell notification so you don't miss any future videos. So it's crucial to talk about the potential risks and considerations. As with any investment, there's no guarantees, and it's important to understand the risks associated with this ETF. Big one being market volatility and changes in the dividend payouts. TSLY still boasts the 52.89% yield on their website that pays monthly. This has many investors adding this ETF to generate that monthly income. But again, are you really making any money? So let's take a look at two areas. So first area I wanted to focus on is the declining share price. Year to date, TSLY or TSLY is down just under 11% year to date. So imagine you had 50 shares of this ETF at inception. The original share price was $21.76. It dropped to around $14 a share within the first 2 to 3 months before rebounding a little bit back, and then it came back up to around $18 a share. So many people bought into this, I would say, around that $18 a share price point. So that 50 shares at $18 a piece is $900 in the initial investment. At the time of this filming, the share price was hovering around $12 a share. So 50 times 12 is now $600. That's a $300 drop or 33% of your initial investment. Now the question is did the dividends make that back up? So let's go back to the end of February to analyze this. The share price at the end of February was $17.85. So we can factor in the dividends plus the drip from March up until now. So TSLY seems to be paying its dividends typically between the 15th and the 18th of every month. So just to make this easier, we'll go ahead and use the 15th of every month for this scenario. So as you can see from the Yahoo Finance historical data, TSLY's closing price on March 15th was $15.28. So if we go back to our 50 shares, at the original $18 share price that we purchased them, or the $900 initial investment, we would be down $136. March had a dividend payment of 0.9023 cents a share, so 50 times the 0.9023 cents is $45.11. So if you add that $45.11, you would still be down $90.89 off your initial investment. So now let's add the drip back in for the month and continue the cycle. So $45.11 in dividends divided by the 15.28 share price would equal an additional 2.95 shares. So at the end of March, you would be down on your investment $90.89, but you would now have 52.95 shares of TSLY. So in April, the 15th fell on a weekend, so the next trading day was the 17th. The closing price on the 17th was $15.16. So if we go back to our 50 shares at the original $18 a share or $900 initial investment, we would now be down $142 just off the share price. So now let's factor in the dividends you would have received for the month of April. April had a dividend payment of 0.8286 cents a share. This was just over an 8% decrease in the dividend payment from the previous month. So the 52.95, your new share total, times the 0.8286 cents is $43.87. With the dividend reduction, you have more shares but received less in dividends from the prior month. So add the two dividend payments you received thus far together, and you'll get $88.98. So add that to the $142 that you're down, and you are still down $53.02 on the position. So you're making up some ground though. Now let's add the drip for the month and continue the cycle again. So $43.87 in dividends divided by $15.16 share price would equal an additional 2.89 shares. So at the end of April, it would mean you would still be down $53.02, but you would now have 55.84 shares of TSLY. So in order to save a little bit of time on the video, I don't want to drag this out and have you guys watching a 3-hour video on the math. I'm going to fast forward a little bit here. I'll just put the math on the screen. I think after the first 2 months, so you guys kind of see where I'm going with everything. And we'll fast forward up until, we'll say, just last month, and then we'll do this month, and then we'll total it out. So you can see for May, the dividend payment was 0.4402, nearly in half. So the 55.84 shares times the 0.4402 equals 24.58. So you take your $157 that you're down on the position, add the now $113 that you received in dividends, you're still down on the position $43. So the 24.58 you received in dividends, divide that by the share price. For the drip, you now have an additional 1.84 shares. So at the end of May, you're down $43, but now you have 57.68 shares of TSLY. So as you can see for June, the dividend payment was 0.8033, so you made $46.33 in dividends. So you're up on the position $45.95, and you add that to the $159 in dividends, you're up on the position now $205.84, and you added an additional 2.82 shares. So at the end of June, you're up $205.84 and now have 60.5 shares of TSLY. So as you can see for July, the share price jumped dramatically up to 1804. So if you multiply that times the 60.5 shares that you had, you're up to $1,091. Minus that by your initial investment, you're up $191 on the position. So the dividend payment for the month was 1.0661. So multiply that by your 60.5 shares, $64.49 dividend payment for the month. So $191 you're up on the position, plus the now $224 in dividends you received, you're up $415 on the position. So you would have earned 3.57 shares. So at the end of the month, you're up $415.80 with a new share balance of 64.07. So you can see for August, your 64.07 shares times the 1446 share price, $926. So now you're only up $26.45 on your position. Okay, so for the month of August, you take your 64 shares that you've got. The dividend payment was 0.8303, gives you 53.19. So with the $26.45 that you're up on the position, plus the now 277.57 that you received in dividends, you're up on the total position $304. So 53.19 divided by the share price gives you the 3.67 shares. So at the end of August, you are now up $304 with a new share total of 67.74. So for the month of September, you got your 67.74 shares. Share price was $14.74 equals $998.48. So you're up now just on the underlying position, $98. So you take your 67.74 shares, divide that by the month's payment of 0.5849 gives you $39.62 for the month. So you're up $98 on the position plus the now $317 in dividends. You're now up a total of $415 on the total position. So you would have earned 2.68 shares that month. So it brings you to $415.67 for the position, and now at 70.42 shares of TSLY. All right, and so for October, you have your 70.42 shares times the share price of $13.68 gives you the $963. So now you're only up on the underlying position $63. So for this past month of October, you have your 70.42. Dividend payment was 0.5769, so it gives you your 40.62. So you're $63 up on the position, plus the now $357 in dividends. You are now up $421 total on the position. You would have earned another 2.96 shares. So at the end of October, you would have been up on the position $421 with a now 73.38 shares of TSLY. I know there's a lot of information here, and the numbers may be a bit off reality, seeing as how I use the 15th of the month, but I just wanted to paint a picture for you of what TSLY has been doing. The underlying stock has dropped significantly from the figures I first used. What made this possible to make any sort of profit on it was the fact that when the dividends were reinvested, it also brought your average share price down, or your average cost per share down. What made this scenario profitable overall are the dividends that were paid. You can see that each month, just the drip alone brought in 2 to 3 shares of TSLY each time, and the scenario ended with an additional 20 plus shares added. Now, this was just a scenario. The figures were real, but make your own investment decisions. The share price is just going to continue to move as it has over the year. The dividends are moving too. Just from this scenario alone, there is potential to make money, but it seems solely off the dividends. With the share price being down as much as it is right now, it may be a good time to get in. But please do your own research, however. Please, please do your own research before making any investment decision. Before we wrap up, don't forget to hit that like button if you found this video informative, and subscribe to the channel for more to come. Also, please leave your comments and questions down below, and follow me on social media. We'll see you guys next time. Happy investing.